because I almost forgot about our members that log in through the stream. So give that a second to load up, which it's doing at this very moment. All right, I'll deal with that as I can here. Go ahead, Dan.
All right, awesome. Yeah, you had quite an emotional intro there today, but we're not wanting to make today's session political at all. We have a neutral title. Many people are happy, many are sad, but we're here to make money trading and investing. And that's what we're going to show you here today, that the markets have ripped since the election results last Wednesday. Many people thought it was going to be, debated lawsuits, etc. And the markets just gapped and took off. So this is what we're going to talk about today: how to make money now on and on pullbacks, continuation patterns, etc. But I mean, there was massive differences on who won the election from a trading perspective, with their policies and who controls Congress. So, to keep it real simple, who's going to benefit and who's going to get hurt? We're going to show you the sectors that did get hurt. The most obvious one is green initiatives, and the new Green Deal is tanking here because Trump's not going to support it. But healthcare, and we're going to be looking at broader markets, every sector. We're going to come up with a game plan. We're going to scan, see what the best opportunities are now, including shorting opportunities. But healthcare, energy, banks, technology, Bitcoin right now is at 92.9, all-time highs. Defense, treasuries, what's the yield curve going to do with they both have reckless spending. And I think the media says Trump more so in terms of raising the deficit, and we'll see what that means for trading, commodities, other industries. So we're going to show you, we're going to spend obviously a lot more time looking at real charts here today instead of the typical 45 minutes of charts before we switch over, because that's where we want to show you our approach in real time. If something's extended, we'll talk about, Greg can draw, he's good at that, of what a continuation pattern might look at. We'll look at beaten down stocks. I told Greg, I read at Barron's last weekend that they had the same kind of discussion. Okay, the market's ripped, and what can we do here? And this one guy said, hey, search for the lowest PE. And many stocks remain cheap for a reason, but sure, we can use that as a scanning tool. Do you remember the theory, Greg? Do you remember, or everybody? It's called dogs of the Dow. And it's a year-end strategy, like the last week or two of the year, where you just look for the lowest PEs in the Dow, and those are the dogs. Those are the dogs of the Dow. But then that's just a filter for us, and we're going to use our technical approach, obviously, before we hit the button on anything we do. That's leads us to this screen. So we're pattern-based traders. If I don't have a setup, there's no action, nothing to do. That's the starting point. And that's because, candlesticks and technical analysis, it reflects the sum total of all market participants. And that's a little of what Greg said in his intro. We're going to be looking at how the collective world, investors, moved our markets as their collective scorecard of what they think the benefits are going to be of this new administration. And then we say, okay, well, where is that picture in the trend, support and resistance? Yeah, KP, you're talking just to the host here, but yeah, we're showing screens and talking. So every chart we ever look at our brains are quickly digesting all of this information, but we do it in a slow, methodical manner when obviously we're teaching what master trader strategies it's all about. Market internals, Greg can show you that now. Money management and trader psychology is mandatory to survive in this business. So we actually did an ETF session a couple of weeks ago. And so I just grabbed this slide because if we're trading a sector, this is a fantastic way to trade the sector. I mentioned on the other slide our top-down analysis. So if we find a sector that looks amazing, then we drill down and look at the components of that sector. But a benefit of ETFs is you're trading the whole sector. You don't have so much gap risk, and they have. It's actually more. I think I read, Greg, there's more ETFs than stocks these days. That's because
they're all trying to cash in on
exactly correct.
Which one is better than that one, and
well, and it's self-serving marketing. Instead of just buying the semiconductor SMHs, you go to Wedbush, whatever brokerage firm you're at, and they're going to say, oh no, you got to buy my Vanguard semiconductor sector ETF, because why? Because they make management fees off them. So it's pretty obvious. All right, so I've been doing a lot of talking here, but that's because Greg's going to be doing more of the talking when he puts his screens up. This is a slide, a partial picture of I grabbed from the weekend letter, the advisory swing letter. Shows trend and trend changes. And, Greg, just tell them how the information that you get in this format without even looking at a chart. This has so much information displayed.
Sure. So, look, the letter, when you subscribe to anything, you're subscribing to information that possibly you could do yourself or not, but it guides you in a direction that, well, anything you subscribe to should be aligned with your personal beliefs. And you test certain things out to see if it is or not. But the focus of this matrix is to understand in multiple timeframes what's happening in these sectors. And so as you understand that, you say, well, what's green is good, right? What's red is not. But as you follow this, I guess I don't get the little dots since you're sharing, but okay.
Well, here, let me get rid of mine because you're going to be.
No, if you take the slides down, then yeah, I don't have this, so that won't work. I can explain. So what's going on here? So you've got the daily time frame, the weekly time frame, the monthly time frame. Monthly time frame doesn't change too often, right? It takes a long time. So you've got two columns there. So as you're looking at this on a Saturday or Sunday when it's sent out, what's happened in the last week, and in this column, what happened in the previous week, what happened in this week, what happened in the previous week. So multiple time frames. One of the concepts is that changes begin in lower time frames. And what subscribers will observe over time is that, okay, if this is up, right, and this changes to sideways, why did it change to sideways? Well, there would have to be a minimum of a deep retracement toward major support. That's explained in the video in the member area. Mm-hmm. So that could be a beginning of a change, which means this change to sideways. Well, next week that'll say what it is, and this week may actually change to down, right? Because that's the beginnings happen in that way. And so as we look at these, like you can see here, that was sideways. This was down the previous week, and there was an improvement this week. It changed to sideways. So it's a quick way of saying, hey, what's going on here? This was an improvement. These are great. The previous week, the Russell and the transports we're not green because this column, when it's highlighted, says that there was a trend change this week. So it guides you where to look, and it says, pay attention to this, because there was some type of change of some significance. And so, home builders, these were up at one point. Now they're down 2 weeks in a row, yet they're green. There's a chance for improvement, but there's also the chance that the weekly trend may begin to change. And so, if Dan was to scroll down at the bottom, you'll see marijuana, which is red. And then we look at interest rates and there's different sectors. And the idea here is to recognize where money is flowing into, where money is flowing out of, when there's rotation from one to another, which presents opportunities. And then from here, there's a video, which goes more extensively into explaining what's happening and different trend changes. And we look at some stocks within those sectors. So the top-down approach, broader markets, sectors, stocks within those sectors.
Market internals, we look at sentiment and breadth, and maybe we'll wait for Greg to do it, but at swing levels, it tells us when the sentiment and breadth of the overall market is getting at extremes and gives us warning signals. And the markets are up a lot. Right now, we had sentiment, which is the public buying putting calls. When they're too excessively bullish, then this is going to get up here into these upper bands, which say danger on the long side. So when that's in alignment with breadth, which is a McClellan oscillator, it means too many stocks have advanced and have gotten extended. And when these are in alignment, danger for higher risk for taking on, new swings. And then when these are in alignment on the bullish side, it did its job. Then we're looking for price action to get us in the pattern.
So Dan, go over a second, because look, when you become a subscriber, you're looking for information, correct? But our approach is also to educate you. Right? The saying, give a man a fish, eat for the day, teach him how to fish and eat, for a lifetime type of thing. So these are not no-brainer situations. There's always some kind of a gray area, but there's always explanations to make you understand what we're doing here. So as Dan said, when these are in alignment, sentiment and breadth, there is a higher probability that there's going to be some type of a correction. It does not necessarily mean you're going to get this that occurred, a deep correction. Sometimes they go sideways. Now, what I explained this morning pre-market, so we did some mornings, I explained that pre-market, some of the internals. And there are other sentiment. There's the equity and total put call ratio. It's about options. Options use leverage. And so they're the higher degree of emotion. And historically, option traders, we're all this way. It's just we're measuring this because it's a leveraged instrument, right? Everybody's this way to get so excited near the top or so bearish at the bottom that they have a strong belief that prices are going to continue to go higher or continue to go lower. Right? They're convinced. And so we're measuring that option activity to where it's reached a feverish pitch, either bullish or bearish. And so this morning, as of the last couple of days, what we saw is a market that's extended. We began talking about this has got to correct a bit, not necessarily a big correction, correct a bit. And so we have markets that are correcting a bit. And while they're correcting, we have option traders loading up on calls. And some of them are 0 DTE, of course, where they think something's going to happen today. Unlikely in a certain situation like we have right now. So the idea was we're going to continue to have some kind of corrective price action, but eventually we're going to look for these markets to advance because of what preceded that. Now, breadth had backed off a little bit, somewhat similar to that chart, which was a good thing. So we're having this corrective process. Many are extremely bullish. They probably need to get beat up a little bit, and things will, unless proven otherwise, will advance again, especially as we come into the bullish seasonal period around Thanksgiving and the end of the year. All right. So there's continuous education for you to understand what we're talking about. And if you know, you may just say, hey, for this amount of money, Greg, just keep telling me what's going on a week to week basis. This is all great. If you want to, we have subscribers that, hey, can you share this with me? And how can I do that on my own? And we share that with them. And so, because we've all been where you've been at some point, so we continue to educate and share and allow you to advance to the level that you want to, or just, there's a thing, hey, tell me what to do, or tell me how to do it, or maybe you want both. So that's what we do.
And we do both, exactly. So pattern traders, remember my first slide, this is the starting point of just 9 examples of bullish setups. They work on all time frames, they work on anything that moves. That's the starting point. And then we overlay the other concepts. So this is what we're going to be scanning for here momentarily. This is an older chart, but I just wanted to highlight the concept of multiple time frame alignment. And this was, it must have been, well, swing trade, but I think we gave this as a core long, whatever it was. And core long to us just means, look, all time frames are in a bullish or bearish alignment with what we call a price void. So what is a price void? It means you had a momentum move. So there's no overlapping bars, there's no congestion that should allow for an easier move into the void. Remember, we're still trading patterns. So this is the pattern that we were trading on this. It's what we call a bullish 1, 2, 3, 4 continuation. So you could trade just that. But then our concept of, hey, the weekly is a breakout of a bottoming pattern with a flat 20. The monthly is a double bottom. So these two added to the analysis says, I think this thing has a huge target. Just eyeballing up here, maybe 33 to 35. I don't know. But that would be a huge percent. So, we'll be doing this as we go through charts right now. Master Trader Strategies. This is Greg's course, swing trading course, mastertrader.com/swing trading. And it's just methodically put together with all of those thought building lessons that whether you're new to trading or been in it for 20 years, we use the term objective or subjective. How to objectively interpret price action through all of these concepts that make up the course. So you can go there, check it out on the website. Every module has a description to it. And Greg, this was last week. I'm not sure where we stand on this.
And the year end, do you have the link? I had to switch computers here. I got to go to the other computer. You stand with the site ready to go. I'll give you a minute. I'll have to find the link. Hold on.
And, like I said, we saved a lot more time to sit in our chair, analyze the broader markets, sectors, and start building a watch list for opportunity. And of course, we'll answer anything that you would like us to look at. But Bitcoin, I'm see it over here out of my left eye, is just an amazing example of a bullish move on the Trump, Trump's pro Bitcoin. And I even heard some guy talking on the news before we started here today that there's some talk of the upcoming administration, um, talking about similar to gold, making this some type of reserve, which would require mandatory buying. And now there's this talk of Bitcoin, if that happens, going to 500,000. So it's had a monster move since last Wednesday and the last week. And I think we're in this Bitcoin craze right now. So how do you trade it? You just But yeah, Greg's gonna pull up his charts momentarily, but feel free to ask any questions in the meantime.
All right. There's the link to those year-end specials. They're the deepest discounts all year long. Even in the full courses, they're 50% off. Most people take advantage of the green room at this time of year and the letters, or any of the courses at the discounts there. So you can check out that page and you can see how it's all broken down. I'll switch to.
And yeah, email us with any questions on them, obviously.
I mean, you have two columns for weekly. What does it say? But I have two columns for daily and weekly on the trend. The first column, current, is previous. So, Anne, the column furthest to the right for daily is the most current week, and the one to the left of that is the previous week. So you can see a change from one week to the other. And the same thing for the weekly. I don't have two columns for the monthly because the monthly rarely changes. It does, of course, but that would be a significant change. And then they're color coded as to whether they're just all out bullish, whether they're bullish, but like a lighter green. Maybe there's some correction going on. There could be a caution thing. These things change over time because markets change. Could be a cautious, it could be slightly bearish, or it could be all out red. Stay the hell away unless you want to lose money. So, like marijuana. Yeah, I know. He's not showing that anymore. Hold on. So it was asked, how do you find things that are, what did it say? Demonstrate how you find leaders in sectors. It's easy. It's easy when you have, look, let's just call this a 44 Magnum. Well, you can either kill yourself with it or you can kill whatever, right? It's like it's a tool. Do you know how to use it? So basically, when you buy a gun, right? You know where's the trigger, where's the hammer, where do the bullets go, right? Do you need bullets or not? Anyway, so what you're looking at is, I've taken the raw platform and created it into something that we could utilize intelligently, quickly, to find opportunities between in the broader markets and then sectors within the market. So here, everybody, not everybody, but most, especially institutions, start with the S&P sectors. And so here are your S&P sectors, and they are your broadest sectors. So when we look at, say, energy, XLE, that's your broadest sector. And then if you wanted to look at oil and gas, or you wanted to look at OIH, drillers and so on, you could go down and look at that. When we look at these, how do I find what's moving? Well, the easiest thing is, what's moving today? And I have this sorted by percent change on the day. And I can see, okay, consumer discretionary is doing the best. Now, when I go and look at the chart, I say, well, okay, it's doing the best. Is there an opportunity there? Well, no, not at this moment. Because what we're looking for, as far as it relates to the broader markets, is the market to correct a little bit. However, during that period where the markets moved so aggressively after the election, it was an explosion where it was just like, buy, regardless, just buy. Okay, well, institutions can do that because they'll keep buying on the way down, or they'll do whatever they're going to do. Now, as individuals, we could do the same, but money management is so key as to how am I going to manage this? Where am I going to put my stop? Now, if you don't use proper money management and just say you bought it at the high because everybody else is buying, and it reached that pitch where you couldn't help yourself, well, where are you going to put your stop? How many shares are you going to use? And so what most do at the beginning is they have no concept of money management when it relates to the markets. And that's unfortunate because they do in most parts of their life. So then, maybe you got stopped out on this day, whereas, we're looking for some kind of correction bar or pullback. And I say, well, pull back to where? Well, this is your minor support in this particular sector. This is your major support. That doesn't mean it's coming down there. So we need a method of analysis to determine, is there a continuation pattern? And we do not have one yet. So far, we do have the beginnings of what we call a red bar. Oh, look, it's changing time frames on me as I scroll that. I didn't want that to do that. Anyway, doesn't usually do. That must be something new. Okay. All right. Doesn't usually do that. So we look for pullbacks. So that's what's doing the best today. Well, what's doing the best this week? Financials. It's still extended, and this is the problem right now. And what I talked about in the weekend letter and in the early part of the week, sometimes it's feast or famine. And we may not like what happened on one point of view, is that things move so far and so fast that we now have to wait for some corrective price action. And yesterday's title was Patience and Discipline in the pre-market, because that's what's required right now, patience and discipline. And, while we're finding some opportunities, it's going to come to a point where maybe in the next week or so, there'll be a little bit more of a correction where there's going to be so many opportunities, we don't know what to do with them all. And that's what I believe is going to happen, because seasonally, as you get around Thanksgiving, everything goes up. So that's a broad perspective of, what's going to happen in the next few days, but things are correcting here a bit. So XLF is doing well. We could say, well, what's done great this month? Well, consumer discretionary, we're back to that. And then we could look at the quarter. And of course, we could look at the year. So financials did best of the quarter. What did best this year? Communications. Well, that was the biggest dog in 2022 as it came down to the support and then made a turn. And this might be a little bit of an underperformer. Because why would I say that? Well, this month is not done, but we're getting a wide range bar here. And look at this wide range bar. Sometimes that precedes some type of corrective price action. So we'll see. But right now it's up, up, up. So in that matrix, you would have everything green and up. And what would cause this to go sideways in a trend? It would have to pull back too much, right? So that's the idea. And then in this watch list, it shows you changes. Like the matrix is in the ETF letter, right? This is in the ETF letter as well, but this is in the advisory letter, where you can look at this and say, hey, this column, and this column tells you what happened last week. Well, this is all green check marks. This thing's firing on all cylinders. This is firing on all cylinders. Spiders are firing on all cylinders. Right? So most things are. That, of course, it's always changing. Where utilities was firing on all cylinders not too long ago, And now you've been under these these 50 and 20 for 2 weeks in a row. And here, the 20 MA that used to be pointing up and was above the 50 is now rolling over. So as you look at this, open, if your screen is small, like Bill, I guess your laptop, I don't know how to explain to you, you can open that up or go full screen. But this is a sell setup now. It's broken down under major support, the low prior to the higher high. It's broken down, it's into resistance. It's a textbook sell setup. Right? However, the weekly trend is still up. The monthly trend is still up. How do you handle that? That's part of the course. How do you handle multiple time frames and understanding that? It won't expand. Well, there'll be a replay. I don't know what, on yours, if it looks small. So, all right. So these are your S&P sectors, and you can see down here, healthcare. It's all red. It's even under its 200 MA at the moment. That's this column here. All the others are above. It's coming down to major support. This is on a watch list for a turn. I don't know if it's going to turn, but it's going to turn in the daily time frame before it turns in the weekly time frame. So we'll continue to watch this to see if this does. Now, we can then start going in, right? Mazen is asking about silver, which I'll take a look at, but which has been doing well lately. But from here, right, we talk a top-down approach. Once we find out what's doing well, what's not doing well, and you may say, well, hey, Greg said healthcare is coming to an area where it might turn around. Well, what if I want to find stocks that are maybe testing their 50-period moving average in that sector? I would just click on that. And now, while this is erratic, I found, and it's a biotech stock, the earnings are due next year, but this biotech stock is showing some relative strength. It's kind of messy. I'm really not interested. I'm showing you what you can do with the software and what we do with it. So this will be one of the ways. If I want to see, show me bullish wide range bars, well, WST. Now I found another one. So when healthcare, should it actually turn around, this one is going to lead the way higher because it's already showing relative strength and it's a wide range bar today. So that's being bought. It's above the moving averages. So this is definitely one. You just click here and throw it in a flagged watch list. It's got room to go up.
Yeah, that was such a powerful statement. I hope everybody appreciated it.
Well, Dan, I just talk. I don't even know what I'm saying most of the time.
I don't know, the concept of relative strength.
Right, I know. I'm just
a monthly is going to make a turn. We aren't saying to buy this today. We're saying once that does stabilize more, make a turn, then maybe we get an inside bar tomorrow. And then on Friday, this can be one of our patterns called a bullish 1, 2, 3 continuation.
So what Dan is explaining to you is preciseness, exactness,
right,
in an entry point.
Mm-hmm.
Right? Now, for some, and to some extent, I love that. I love it. But I have also learned that some of that could cause me to miss opportunities.
Of course.
And it can be stressful because when you look for perfection, you can either miss a move or it's stressful to try and find that. When you find it, it's fantastic. And I can show you how to find that because we have scans for that. The other thing is this isn't closed yet. It's only 12:40. So if this looks like that at 3:00 and you said, Greg, can I buy that anyway? Because I don't want to really pay attention to it day to day. I say, yeah. Do you understand advanced position in money management? I'd say, not really. I'll say, well, you can get it real cheap this time of year at the year-end specials. And you can add it to the swing course and you could learn how to manage this in a way where you could take an initial position with a big stop where you say, what's a stop? It's a place where I don't believe it's going to go. And then you calculate your share size accordingly. And so you might sit with this for a little while. And there are plenty of times where, honestly, the exactness that we look for works out amazingly well. And at other times, it works out well, but not amazing. So, for example, Dan recommended this the other day. Now, the stop for the moment is down here. And so when that topping tail formed, it was like, I don't like that. But it's still in development mode. It's a bottoming stock. So sometimes you just have to sit with these things while they wiggle. There's nothing wrong with it. It's just disappointed on this day. It's like, you know, one of your buddies just disappointed you on that day, but you're still a buddy, you know? So it's kind of repairing the damage, so to speak. And as long as it stays above this area, give or take, it jiggles around here, it looks like it can go higher. So the management is done. When you're a subscriber to any of the letters, Dan is managing all of these positions and updating them in the member area and also through text messaging. So there's nothing more to say about this. It's a hold. All right. Waiting to see, is it going to perform or not? I'll look at silver. I didn't forget. You want to look at AA. So this is one, if this was a sector, this would have been moved from an uptrend to a sideways trend because of the depth of retracement. It's questionable. It's on major support. Can it turn back up? Look at this one that's being discussed in the green room today. I don't know if anybody's in it, Dan, but that was a move down to major support. And it's had this explosive move today. I don't know if there's any news, but
Yeah, people are day trading it. We
yeah,
talked spread too.
yeah, a run up. And so I mentioned MU, which you might say, well, what the hell are you looking at that for, Greg? Well, because it's on major support, just like D-Dog was. In addition, the intermarket analysis is that SMH is coming down to a rising 50 MA in an area of support. So if it makes a turn, we're going to be watching for that turn tomorrow. Let me look at silver because I promised I would. So silver had a deep retracement when the market is at very interesting point here. Not only because of the election, but there are some divergences, let's just say, as to how things reacted before. Meaning the ETF later wasn't in silver, but it was in gold for quite a while. All right, so whether it's inflation, the uncertainty, geopolitical, yada yada yada, and then on the election, down. Right. So is Trump going to stop this inflation and all these turns? I don't know. What's so interesting here is that one of the things that's interesting is that if not too long ago, if this was going up, the market would be going down. And now it's not. And some people say, well, that's anticipation that the economy is going to be doing better. Some say it's because they're going to be increased inflation. And so those are opinions. We really don't know yet. But what we do know is that the alignment of what was happening previously is now not aligned. So intermarket analysis does change like that. I mean, I talked about probably for the last 2 years how the markets many, many years ago paid so much attention to interest rates and then they didn't anymore. Right? I don't want to forget our friends on social media. That was one of my main issues when I used to trade. I used to aim for perfection and would miss all the good trades. Yes, welcome. All right. With things that pull back to major support like MU did, what would you want to see in the chart before you buy? A wide range bar, a bear sandwich, a bottoming tail bar. It could be any of those, right? So realize that when we start talking about patterns, and Dan and I have talked about this to simplify and to educate you about multiple time frames in different ways. So We all get hung up on patterns, especially one that we saw that created a belief that it worked out well. For me, many years ago, it was bottoming tail bars. And so I then start looking at all these different time frames, looking for a bottoming tail bar. And before you knew it, I was suffering from analysis paralysis, brain damage from looking at too much. And then the light bulb moment went on. It was like, and it was in the slide, where we say, well, call it what you want. It's going up, right? It went down and it went up. So this bar right here, that bottoming tail bar, if we expand the data, right, it could just look like a 180, a bullish 180. It went down and it went up. It went down and it went up. So you have to look at any pattern in the context of a trend and multiple time frames. So, for example, he's talking about he asked me about MU. What would I look for? Well, initially, right, coming down here, we're looking for stabilization. Now, are you watching intraday? If you were, I'd be down here looking at this 5-minute chart tomorrow to see if this downtrend begins to show breakdown failures, bottoming tail bars, bullish 180s, rejections to go lower, a range expansion bar. Maybe it cracks to the downside. It breaks under this low tomorrow, and then it flips right back up again, or it forms a W pattern on the 5-minute chart. See, these are all tools. And this is what you learn through Master Trader, how to use tools. How do I utilize these different patterns that suggest there's a transition between buyers and sellers? What does that look like? It isn't always going to look the same way every single time, but you're fighting who you are, who we all are, human nature. We want to have consistency and certainty about what we do. We want it to be the same every single time. Well, if you can't get beyond that hurdle in your mind, this isn't for you. But when you start seeing that these things, you can have 2 or 3 different pictures that imply similar outcomes, you're ready to accept that different things can move you in the same direction. And that's more difficult to do. Well, it's not difficult. You just have to accept it. But first part of accepting is learning. Then you have to look at it yourself and you gain experience. It's no different than anything else that you do. You go to school, you learn something, you really don't know what the hell you're doing because all you did was study a theory book and you took a test and you passed it. That doesn't mean you're good at anything. Then you got to go and utilize it. And eventually, through experience and making errors, you become confident that you make less errors. And in some things, like I guess an accountant, the errors are few and far between because math is math. Whereas with trading, there's just unknowns that you're never going to know about. Don's asking me about defense. So this one made new highs. It looks good. And XAR, which is another one, that also moved up. So they're strong. It's extended. You can see the stocks here. So one of the things you could do is the stocks that are in there. This one is near its 20 MA. It's underperformed, but it's messy. Right. This one here maybe could play some catch up. So there are different ways to what you might want to find. You can see this has got 2 check marks, the 20 and the 50 MA. They're in the same area right there. So this might be something that would catch up. However, here is that sector. It's short-term extended. So that really isn't aligned perfectly. We'd like to see this pull in a little bit, but it did gap up from a red bar. So, it's trying to make turns here. And we can see the broader markets looking at the spiders. This may be ready to go tomorrow. I mean, there's an economic report coming out tomorrow, but the market's kind of brushed off that little increase in inflation that was reported today. But this is a buy setup. Now, it's a buy setup little far from support. So theoretically, it's a buy setup that could come back in. Right? It wouldn't trigger until tomorrow. It's got to trade above these highs, but it would make sense to go ahead and enter a smaller position because maybe it just keeps going. It's not a buy setup that would be ideal. Maybe if this would have been a red day today and would have pulled back into that unfilled gap. So you've heard us say probably a million times, if you come to empty lies, look to the left, where you've been with us for years, look to the left. Where's support? So support is down below on the daily time frame. If we look at the 65-minute, right, we see this support here. And so far, this is building up like it wants to go higher. So we'll see where this closes today. And then from there, we will go with. Block, right? Dan mentioned Bitcoin stocks. Right? Some are beginning to correct a little bit. Some didn't perform at all. I don't know why this is in with Bitcoin or block, but anyway, interest rates are moving up. As I mentioned, it's interesting. The markets continue to do well. With that, we don't have multiple time frame alignment. Oh, we do. Tatiana, we do have, and you'd have to say in what vehicles are you thinking we don't have multiple time frame alignment? Because most of them we do have multiple time frame alignment. It may not providing us entry points. So even look, this uptrend, this is an uptrend, and even the hourly is trending up. Now, if we start looking at like a Microsoft, and we go and look at the monthly time frame, that trend is up. This trend is sideways. This trend is sideways. So you have to apply these to, the instrument that you're looking at. This is one from today in the room. We got alert on ACN, doing very nicely. So while it's a technology stock, and so while you look at these broader markets that are not ready for prime time yet, this one came across yesterday. Well, I saw it yesterday and I set the alert. It had gapped up, and this black bar, you can do this in the software. So if it's a wide range bar, I just put this in here. So this wide range bar scan, I see this here, bullish wide range bar or bearish wide range bar, it color codes it. So it's just a visual thing. I mean, it's not a signal to act, but it's a visual thing. So this took out this little consolidation there, and that looks good, like it can go higher. KMX was one from yesterday. It backed off a little today, but that similar pattern looks like it can go higher. Saying Dan has 15-minute daily, weekly charts on every chart he brings up in the agreement firm. Yeah, so that's Dan. That's how Dan likes to look at his. So you get to have your own choice on how you like to look at things and what time frames, right?
Well,
Most times the monthly time frame isn't going to be relevant until the end of the month.
Yeah, no, just to clarify, I have the 15 just because it's my laptop with limited space. On my big computer, I also look at a 5-minute and a 65-minute because I have more space. I'm just typing out here, Greg, a few that I have on my long watch list here for today. There's, I don't know if you're scanning, but here's a few of them. We actually have naked puts on Disney that into earnings. Let me see what strike it is. We're short the 91 puts. It was in the weekend letter for 70 cents.
So some may not understand the thinking behind this if you're not familiar with options. So a put option is basically a bearish bet if you want to buy a put. Now, we look at things, everything through a view of the chart and whether it kind of meets a common sense measure. Does it make sense to do a trade? In other words, would you want to own Disney at $91? Well, if it gapped down there tomorrow, probably not. But what's the probability of it going down there tomorrow? Well, so far it's trending up. It's got a rising 20 and 50. It's got an unfilled gap here. It's got major support here. Here's a 50 MA. Here's another area of major support just above $91. So unless Disney comes out with some horrendous earnings, it's not going to $91. Now, it might gap down and go to $97, but as a put seller, you don't care. You still get to keep the money. And if it gaps up, those puts are going to be worthless. If it gaps down to $88, you're going to be crying in your milk. It's the way it is. But, you could say, well, it's Disney, I'll hold on to it. That's your prerogative, right? But, whatever those puts were sold for, your cost is 91 less what you took in for the premium of those puts. So your cost is still going to be way down here. So, you're assessing, you sold for 70 cents. So now your cost is $90.30. And that's what you would own Disney at.
Exactly.
And you're close to support. So overall, it's a very reasonable, intelligent trade.
And you could close it now for 60% of max profit if you want.
Yeah. Right. So in this layout, by the way, when you become a member of Master Trader, if you use this platform, which we have zero affiliation with, and I just create these layouts for our subscribers and for Dan and I, you could open up an options table and you can go ahead and now look and see, look at those options and, do you want to sell puts? Do you want to buy calls? Do you want to do a credit spread? We're providing you with the tools to do that. And so in addition, I can switch to this page here, right, which is another way of looking at the top-down approach. And so here, what's Bitcoin doing? Did I change something here? I guess I did. There's Bitcoin, which is obviously going to the moon. And you've got your S&P sectors here. And so the way I've created this, I put different scans like the other one within this watch sector and do the same thing. So, we can go to the transports, which, you probably heard of Dow theory. How's the Dow doing? How are the transports participating? Well, they weren't for the longest time. The transports were not participating. Now they are. Green check mark for the markets. Russell was not participating. Who's up here? Monthly. Now it's up at resistance, but it broke out on the weekly. So another green check mark for the broader markets. Where they looked at financials, they're participating, they're doing good. Now, semiconductors are not participating for the moment, but it's technology. So technology, for whatever reason. So again, look, you can say, well, this is doing okay. It's not moving up like other things, but it's definitely doing better than semiconductors. And so why is that, Greg? Can we find out why it's doing, semiconductors are doing so much worse, but something in technology is doing better? What else is in technology? Software. Software is a little extended. It's doing better, but maybe software had been pulling back. What do you do with that? Well, let's look at software stocks. Let's find software stocks that are showing relative strength or relative weakness. Or maybe, hey, range expansion 180s. We're probably not going to find any, and we don't. Are there any weak ones? No. See, this loaded the stocks within that sector. So you can start looking for different things. Can I find one that maybe pulled back to the 20? Okay, D-Dog. That crossed the 20 today. So these are underperformers, but they might play catch up. So in other words, once you understand the market structure, right, the structure of the markets and the top-down approach, you can begin to zero in on where the money is flowing into and out of. And like I showed you healthcare before, healthcare has been underperforming, but it might be ready to make a turn. It's not ready just yet. But if you choose to focus on that, which will take some time, throw things in a thumbnail, and through being organized, which in part I've showed you how to do. You learn more in the course, you learn more in the green room on doing this. And eventually you should become self-sufficient on how to do this for yourself and gain confidence in approaching the markets with a plan.
Thank you for listening to Master Trader Live.
Having a trading plan and money management,
This video on your timeline.
position management,
And a friend who wants to learn stock
and a
market.
simplified approach. So I hope you enjoyed this.
Oh,
And if you have questions, of course, email Dan and I.
every week.
And consider our end of year specials, which are the best of the year.
If you enjoyed the event,
We'll be back next week.
just visit mastertrader.com. That's mastertrader.com.